Welcome back to Crown's Crypto Cave and a bit of a different video today as we go over the True Strength Index and the reverse function of it to come up with a nice little trading strategy. Of course, first things first, we need to discuss exactly where can we find this indicator. Well, I will have a link in the description below of this video. It is 100% free. It's actually even open source for the reverse function of it, which Caretaker himself has created for our lovely community. All you have to do to get it is just go over here to your public library, type in CT reverse, and that's actually going to populate all of Caretaker's indicators here, but the one that we're going to be using today is this specific one. Like I said, it will be linked in the description below, and you can also use the on-chart version as well, but like I said, for this demonstration, I'll be using this baby right here. After you pull it up, I've made a few visual changes to it, nothing structural, although I would say that over time, the inputs will extremely likely change here as I do play around with things. I'm actually having some pretty damn good results thus far, but not enough testing to really put my name on it just yet. As far as style goes, I've actually gotten rid of the scale high and scale low. You don't need to do that if you don't want to do that. I just think it makes the pain look a little bit easier on the eyes. Okay, so first things first, let's kind of explain what it is. It's momentum oscillator in the same way that you see a stochastic, and the same way that you see an RSI, MACD, all these sorts of things fall into the same sort of category. It's essentially telling us about momentum in the moment. And with that in mind, why am I actually preferring this one over my traditional or the usual suspects I refer to them as, aka why am I looking to replace this with perhaps stochastic, for example? Well, the reason why I am is because this is actually given a bias within the indicator as to when signals are more or less likely to work out. Now, we can obviously apply our regular tools as well, as I have discussed in several other videos, as to when to know like what signals are a little bit more likely to work out compared to which ones that are not. That's what I'm trying to say. But combining those two things together with the past ones and also with what's built into this indicator will create a much more efficacious strategy for those signals that are a lot more likely to work out. Okay, moving on. Let's go over the different moving parts within this one. Okay, so we got two oscillators right here. We have a fast one and a slow one. The fast one's represented by the light blue. The slow one is represented by the white. On top of that, we have several areas of interest here as well. We have the green line, which represents what I call the zero read. That essentially is our bias for the current momentum, meaning that if the two oscillators are above, generally looking for bullish signals. If the two oscillators are below, generally looking for bearish signals. And ideally, I want to be catching those signals around the zero read. So what you see right here, what you saw right here, what you saw especially right here, and right here. Then we have something that I think is massively misunderstood and massively misinterpreted, which are the critical zones, which are above this level right here or below this level right here, traditionally referred to as overbought or oversold. Now, in my experience, is there anything that is actually overbought, oversold? No, that's a nonsense statement. It doesn't exist. Things can go up and continue to go up for infinity, and vice versa for the downside as well. It's a bad interpretation to really be having. What it should be thought of, though, is like a critical zone in the way that I think of it, meaning that if you get above what would be the overbought zone or below the oversold zone, it's going to be a lot more difficult for momentum to maintain that because it's so far out there. So during those times, we want to be looking for some sort of reversal-like behavior. In the case of overbought, we want to look for topping behavior. In the case of oversold, we want to look for bottoming behavior. This can be accompanied and verified by several other indicators, and we can even use this indicator itself as a bit of an insight for that as well. On top of that, we want to be talking about we've already talked about blind crosses here. Obviously, that's pretty self-explanatory. When we see the fast oscillator cross the upside of the slow, that's generally your bullish cross, and vice versa to the downside for a bearish cross. And then also, we can discuss a few other tools and trips with this, but I want to make sure that we've actually gone through everything here. Yes, here's the most important one. Of course, the whole reason for this video, the reverse function of this represented by the info box right here. This is where the magic happens. What we want to keep a keen eye on is the cross above signal line and, of course, the cross above or below the zero line. These are the two big ones. Everything else is kind of going to play into more or less bias as to like when you should be holding a position or when you should maybe be scaling out of position. But those are the two big ones for this particular indicator. as that's going to help you, or at least I would imagine it's going to help you kind of design a risk management parameter and also a take profit parameter perhaps as well. Okay, all right, so we've gotten through all of the baseline stuff here now. So let's go over a few ways to use this. Now, like I said before, you can use this in a very, very simple way, just looking for the fast moving oscillator to cross above the slow moving oscillator. That's gonna be your generic buy. Now, I would actually argue that is a terrible way to be using this. In fact, it's really not using this to its maximum degree to begin with. What you wanna be doing, or at least what I've found to work a lot better with this, is to identify the signals that happen around the zero read. And this could even just be both of the oscillators crossing that zero read to begin with, as you see right here. Technically speaking, there is no bearish cross right here. The bearish cross happened all the way over here, but your momentous drive happens right here. That's when both of the oscillators are below the zero read, giving a bit of a bearish bias, saying, hey, only look for the bearish signals, and then, well, trend follows through, obviously. That brings me to my next one. So seeing as that is our bias with the zero read and the current positioning of the two oscillators around that, we can further enhance that by looking at the trend for that time frame as well. And that will increase the hit rate of these signals. So what do I mean by this? That means that we need to go into our price action right here, judge the trend. Are we looking at higher highs and higher lows? Or are we looking at lower lows and lower highs? Well, in this case, it's pretty damn simple. We have obviously a high here, a lower high right here, a low here, a lower low right here. This one on the lower high, you'll notice that happens exactly as these two oscillators move below the zero line. So we have trend on our side, we have the bias on our side, and now the oscillators are also on our side. So trend on both of those, bias, and then momentum essentially. And that gives you the move basically on closing basis, which both of these officially close right here. So that would be on a closing basis, if you took this one, 57,760 on that drive down all the way from there to, well, 54,000 bucks, which based off 4-hour signal, pretty damn good. Now here's the thing. That is all included in the base functionality of this indicator, of course, but the info box is really where I want to put a big focus on right now, because it will help combine that sort of an entry also with a risk management, all inherent within this same indicator. So if you are entering on this right here, because these have officially crossed below the zero read and we have trend also on the same side for that time frame, then as soon as we enter on that closure, what you want to do is you want to immediately have your risk management set to one of three things that I typically refer to. Two of them are included within this indicator. The other one is something that I would suggest that you have. Of course, there's going to be people out there who don't have it, but we'll just leave it at that for now. Anyways, risk management parameters are going to be pretty damn simple here. Okay, cross above the signal line. That's your obvious one. Whatever that number is upon entry on closure, that is your risk management. Obviously, right now, it's not going to make any sense to like be managing risk at 56,200 on a cross the upside. It's just not very helpful right here. You should be taking profits in other ways, is what I'm saying. By the other token, you could look at a cross above the zero line. That's going to be even less relevant here because it's literally like 10,000 bucks away, more than 10,000 bucks away at 66,116 and some odd cents. But more importantly with this, when you enter, which we actually don't have the advantage of running this back right now, but let's say that we were over here, the info box is obviously going to be different. So upon entry for the next 2 to 3 closures especially, these are going to be natural risk management areas on closures. Now, of course, that brings up the next topic, crown. What happens if price action just absolutely screams against me and I'm absolutely shish kebabbed? Well, that can certainly happen. That's why strong is just to have a third metric to be judging risk. And that is what I refer to as a critical or emergency risk management scenario. And in this case, what I like to do is on that closure that I entered on, so it would be, so assuming that I entered on closure on this one, so that's 57,760. So we're not hindsight trading here. What I'd do is I'd take that same closure here. I'd look at the high side of it, because in this case we're taking a short, and I'd actually have my risk management right at the top side of that, basically the high of the prior. That's what I'd be looking for. So that means that if price action just even ticks above there, I'm out. Doesn't matter if it keeps on going in my direction. I don't care, because this has insinuated to me that something, out of the ordinary, something that I've not planned for, something that has essentially broken my bias and told me that this is not essentially what I should be looking at right now has happened, and I want out of this position. Of course, this emergency scenario is going to have a lot more risk inherent than what it would have been if you waited for one of these signals over here to get taken off for your risk management. But that is why it's an emergency scenario. And in this case, from entry to what would be your emergency scenario would be about $700 in positional risk. That's quite a fair bit, to be fair. But again, it needs to be in there because those situations can and certainly will over a long enough time period happen. Okay, cool. All right. Okay, so we got crosses. We got what a general good signal looks like. Let's go over a few more examples of what a generally good signal looks like. We have this one right here. This one does not work out all that well, although you do get a little bit of profit here, as it tells you to enter right around this area. Trend is, well, actually trend is down. Actually, we're downtrending on the 4 hour right here. That actually marks off your lower high, to be fair. So you know what? This would have been a good indication. This is not the signal you're looking for. Let's go to another one. Here we go. So this is completely the opposite. All right, so we have a little bit of reversal right here. We have a higher high, we have a low, higher low, high, higher high. Okay, so reversal. That gives us the trend of the time frame. So we're now looking for upside, or sorry, bullish moves essentially. Then we go over here and we say, hey, we don't just want to be blindly entering on this, although you could have, to be fair, if you're more aggressive, and that would have taken you from about 47.5 all the way to 53. Crazy. But the really good signal happens a little bit later. That's when things come back down base around the 0 read. And when it gets a bullish cross around the 0 read in the same vein as the trend, which we do have higher lows still going through here, that is the big move, coming in all the way from about an entry of about 48,000 bucks to, I mean, basically your next high at about 61,000 bucks. Not always going to be that good. So what's a potential way to take profit on this indicator? Because I would not, because it's not really going to tell you like great profit taking ways to do it. There's a few ways that I can show you here, but I would actually suggest just using very simple tools like judging horizontal levels. So in this case, where's the next horizontal level? Well, you have an obvious one right here, just local high, very simple stuff. You have another obvious one right here, another local high, and you have your high right there. Maybe you want to scale out in thirds, maybe you want to scale it in halves, maybe you want to do it all in one go. Whatever you decide for yourself, that is, personal preference. But more importantly right here, let's say you enter right here, what I would be doing, and actually I even have a target right here, because I like to take profit really, really fast, at least on a third of my position, sometimes even a half of my position. And I would target this area right here. Just the next relevant local high, and then I'd take off, the next half or the next third at the next relevant one as well. Or could do it, like I said, all in one go. I mean, this is a pretty nice move, to be fair, from 47.5 all the way to 52.5. I mean, that's 5,000 bucks, not bad. Certainly not bad. Bitcoin's very generous right now. But more importantly, I just want to show that I don't like this indicator for taking profits. Now, you could just as easily say, well, Crown, couldn't you just wait till it has a bearish cross after the bullish cross in order to take profit? You could do that, and that would have kept you in the trade a little bit longer. Told you to take profit here at about 55,000 bucks. But as you can see, things actually do continue onwards and upwards from there. And more importantly, if you go over several other examples, that's not always going to be the case. In fact, it very rarely is. Another alternative way that you could do this as well is by judging trend lines on the oscillators themselves. So you could do something like this. And whenever it breaks that trend line, that's when you should be taking profits. So in this case, again, you're not going to be entering right here. You're going to be entering right here, which I'd even argue is a better entry anyways, because it's a momentous drive rather than a range trade right here. Although, that range is pretty damn generous again. But more importantly, that will say, hey, once Bitcoin breaks below this level right here, that's the time to get out. And that actually keeps you all in all the way to about 58,600. It's a little bit better, yes, but I still, personally speaking, if I'm giving my, my sort of trading strategies here, I like to use horizontals here because it's going to be more, safe for a longer period of time. You're not always going to get these like strong trending moves, of course. Although when you do get them, they're quite nice, and you always look back in hindsight and you're like, damn it, I should have just done that. Obviously easy to say in hindsight though. You could also look at divergence on this as well. I don't think it works as well. What I would suggest, however, is if you are going to use divergence, I would use it in tandem with the RSI. We can bring up a stock standard one, or actually I already have one here. Let's pull this baby up. And I'd actually even argue that RSI divergence is probably going to be a better way of taking profit to begin with on this one. So let's say that we enter on this same signal. Well, now we start looking at our RSI for potential divergence signals, and we actually do get it on this drive over here. So that would tell you to exit at about 58,000 bucks. So multiple ways to skin a cat, as always, as the typing intensifies in the background here. And But more importantly with that, you can choose whichever way is most relevant for yourself. Personally speaking, like I said, I like horizontals. I just feel like it's more dependable. You're not gunning for you're not trying to hit a home run every goddamn trade, but that is personally speaking how I like I would rather trade higher probability of profits for potentially less profits, essentially, mark to mark. Okay, let's look for a bearish signal here. Go back to this area. Do we have a bearish signal here? We do have a bearish signal here. We actually have a pretty nice one. All right, so this was when Bitcoin was just below its prior all-time high at about 20,000 bucks. You can see that it starts to downtrend on a 4 hour with these lower highs, 1, 2, 3 lower highs, breaks the low right here. That's your official downtrend. And actually almost simultaneously, it does break below the zero read as well. That could be considered a bearish entry on closure right here. That would get you in at 18,750. And then of course, things do come all the way down to about 17,600. So at that point, I mean, this was, this was quite a nice move, to be fair, about 6.5%, which doesn't sound like much when you're looking at our current price action, but still pretty damn relevant anyways. And that's probably a little bit more what you're looking for based off these signals, especially when it's contra to like the, to like the daily, weekly trend in this case as well. We can go back to 2018 for probably more interesting bearish signals here. Obviously, trend is all the way down, mostly, and actually this is 2019 right here, June 2019 all the way to, I think it was like Marchish 2019. Anyways, downtrending the whole way through. And we have several bearish signals here. We can just pick out any old ones that we want. Again, because it is downtrending, we essentially only want to be looking for downwards, only bearish signals. And in this case right here, what would be a really good one? Okay, I would argue that actually one of the best ones on the board, as far as picture perfect goes, would be this guy right here. It's obviously downtrending the whole way through. In this one, you actually have a bearish cross right at the zero read. So it's not just, you don't just see both the momentum oscillators below the zero read, you're actually seeing a bearish cross right at the zero read, essentially a rejection. And this one comes all the way down. Again, not gonna look as impressive here, but it's about a 6.5% move. Not bad. Certainly not bad at all. I mean, we have several examples over here too. You got this baby right here. This one has a bearish cross right here. So we'd be lining that up with this guy at about 10.3. And over the next few days, dumps all the way down to about 9.3, $1,000 move. Again, having that bearish cross right at the zero read, that is kind of your rejection zone. So as far as, using the info box with this, you can imagine that it's massively advantageous, because you can actually scale into those positions based off the estimated, or not estimated, but like the presumed closure that would be needed in order to produce that movement to begin with. So the way that I actually like to use this for entry is actually like to split it in halves. I'll enter a little bit before, if it's like a possibility of cross, as indicated by the cross above or below the signal line. And then I'll enter the second half upon confirmation of closure, is what I like to do. And then I use the both the signal line or the zero line, depending upon which one was more relevant. It's usually going to be ideal. It's going to be both for risk management parameters on the next closure, and then again for an emergency situation, usually marking off like the prior wick high or low, whichever one's more relevant. For exits, as we discussed, you can use trend lines on this indicator. It's okay. I don't think it's as dependable long term. You can also obviously use divergence on this indicator, although I'd suggest RSI if that's going to be the case. And personally speaking, I like to take profits on the next relevant horizontal levels. So that's that, again, personal preference there, but multiple ways to skin a cat in this case. Anyways, we are 18 minutes into this video. I think that we have gotten out all of the most important things with it. Again, the big focus on this one is just the inherent value that you get from this info box that kind of lets you know where your actual risk is. So when you go into a trade, you know exactly what you're potentially going to lose. And as far as targeting what you're going to make, well, that should be pretty damn easy to do as well. Now, what I'd suggest you do yourself is backtest this, not with actual money, but put this to the test without actual money. See how it operates over a long period of time. If you can make it a profitable strategy, for like a couple months in dynamic situations, then maybe consider actually implementing it. Of course, this is not financial advice. I'm not a financial advisor. Just kind of sharing what I like about this indicator. And I hope that this one serves you well. So with that said, I'm going to be signing off now. Take care and see you soon.